Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. We are here for another day. Wow, the market was green. We thought we were going to make some gains today, and then the market did a flippening, like we hear in the crypto market, right? When's Ethereum going to flip in Bitcoin? Well, the market flippened itself today. Oh my goodness. We've got a bunch to talk about. There were actually some good spots in the market today with a couple of earnings, like Zscaler. It really blew it away. Box blew it away with their earnings today. Salesforce, not so good. So we're going to talk about those more in depth. We actually have some thoughts on Cathie Wood, on what she's thinking about this market. And it's the complete opposite of what the Fed chair is thinking about this market. Before I get into it, the market, I just want to remind everyone that this show is for you. If you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. That is the most important thing to me, what's on your mind and answering your questions. That's top of the list, everything that this show is about. So I'll share my thoughts on the stocks that I have lined up to talk about, but it's for you. Okay, so if you have a question, just leave it in the comments. All right, first up, it is the first day, or I should say welcome to the first day of the last month of 2021. Now, a question that we always ask at this exact same time of the year, every single year, is this question: will we get a Santa rally this year? Or is the market going down for the rest of the year? Last year, we had a Santa rally, right? What's a Santa rally? Well, that's when the month of December is green day after green day after green day. It's the Santa rally, right? All the way from the beginning, the 1st of December, through the end of December. Well, the question we need to ask ourselves this year about the Santa rally, or not, or bust, right? Is the market in a different place than it was last year? Is the structure of the market different from last year? And the answer is a big fat yes. The market is in a totally different place than it was last year. The whole structure of the market is in a different place than last year. Technically speaking, the structure is completely different. Just in front of you on the screen right here, this is the S&P 500, okay? I use the ticker symbol SPX in TradingView. There's a link in the description for a free account. Now, all the way on the right, this is where the market is at right now. So we came out of November in a decline. We fell under the 21-day moving average. We bounced around the 50-day moving average, but today we finally broke under the 50-day moving average, like we did back here in the middle of September when we just blew past that 50-day moving average and sunk below it. So we're below it right now. And if you look right above my head, this is what the end of November going into December looked like last year. Let me circle it. Right here, this right here is the end of November and the beginning of December last year. So it is a clear and glaring difference from last year to this year. So let me circle this year. This year's structure versus last year's structure. So the two purple circles. Last year, the end of the end of November going into December, versus this year, the end of November going into the beginning of December. Completely different structures. So this year does not look as hopeful for a Santa rally. Okay, we got a couple of fascinating questions here. But ZS, which is Zscaler, and I'm going to do a deep dive on those in a moment later in the show. at 319. All right, so I'll look at that when we get to that part. Not sure if it's a good entry point. I'll talk about it when we get to that, Zscaler, because they had a blowout, excuse me, they had a blowout earnings, and they've got incredible growth. Is this forever? David after dentist. Devin, your jokes are they're the top of the list always. Yeah, DWAC was moving in fast. There was news about DWAC. There's reports that DWAC is looking to raise $1 billion in pipe investments. So yeah, that's why DWAC was moving today. It moved up. What are your thoughts on fuel cell, Bloom Energy, and other hydrogen fuel cell companies for the future? I like Bloom Energy out of the list of them. I think Bloom Energy has the best capacity and the greater chance for growth. But also remember, the market dynamics are shifting right now from positive to negative. So that can affect even companies that are doing great and who should be going in the up into the right direction on the chart may not be as heavy-footed or as full-throttled moving that direction because the overall market is dragging everything else down with it. Now, of course, there will be winners. There will be stocks that move, but you have to also take into account with your investment thesis, what is the overall market doing right now? And right now, it has shifted to a negative stance. Let's see here. Please look at Facebook too. The bottom dropped off. Where is the firm support? Yeah, we looked at that one yesterday. Let me just throw a couple of these up here real quick. I'm going to put Zscaler up first. That was the first ticker symbol. We'll talk about this more in depth in a moment for Zscaler. Here's their stock chart right here. They were down, surprisingly, 8.29% today, but their earnings were stellar. So just remember, this fallout right here was before their earnings announcement. Right now, they're flat. There's not really anything happening in the market right now as far as these companies that did excellent on earnings, except for, I think, Snowflake. I think they're moving in after hours last time I checked. But there was a complete reversal on a lot of these stocks. They were in the green this morning, and then they flipped to red this evening, and then they fell even further into the close. So you can see Zscaler here. They fell out of their trading channel, not quite down to their 50-day moving average quite yet, so that's still a positive. But their earnings were excellent. Earnings were excellent for Zscaler, and I'll go into that in a little more detail. Let me just put DWAC up here real quick. This is the one, the SPAC that is bringing, I guess, Donald Trump's media company public, something of that nature. But it was up 7% today. But in the after hours, since the news broke about the $1 billion pipe investment that they're raising, they're up 22% in after hours. So you see the candle down here, right? Well, that's not quite where, let me get my bearings here. Okay, so the stock is almost up here or just above the 21-day moving average, which is that purple line that you see right here. That's just above the candle. That's where it's at right now. It's at $54.30. So it popped really quick, 22.4% in after hours. Let's see here. Facebook. Facebook did announce yesterday that they are postponing their ticker symbol change. So they will not be changing to Meta platform on December 1st today. They're waiting till the next quarter. All right, when we talked about this yesterday, we had this purple line and red line here. The red line was going across the 21-day moving average. The purple line is where Facebook has been bouncing off of for the past month. But it did have this, 2 months. But it did have this head and shoulders pattern where it got down right here to a low of $312. And I had a support line drawn right here at about 315 for that. Now that it's fallen below it, the next gap is all the way down to $300. That's where the next support would be for Facebook, around $300. And where we get that from is we have to go back to where they had support before in this area. And it's right here all the way back to May of this year. That's where they had support at the $300 area before they, of course, continued their rally up above that. So Facebook is a company that's loaded with cash. It's also loaded with controversy, but the company does make money and it's got good margins. So a lot of what's happening today in the market with all of this pain in the market is due to uncertainty. So investors are taking their money out, they're taking profits, and that's causing the market to go down. It doesn't help that it is the first of the month. Usually around this time, the end of the month and the beginning of a new month, you have more selling pressure that can occur just because of the way the hedges work, right? Their whole business model. But yeah, $300 for Facebook. That's where the next support area would be for them. Even though there is one right around the 310 that they have kind of been, I'm sorry, where did I have that at? 315. 315 was a support area, but the head and shoulders, the head came down to $312. So it's just about where the head was earlier in the middle to end of October. All right, moving off of that, thank you for your questions. And again, we will dive into Zscaler here in a moment. All right, here's a quick overview of what's going on with the market right this moment. Did I get that right? SPX or no? SPW. Totally wrong company there. No, wrong ticker. SPX. I want to get the S&P 500 back up on the screen so we can see that together. All right, so the market, completely different structure than it was last year. So overall, all three main indexes, they reversed early gains in the session to close below the flat line after the CDC confirmed the first Omicron case in the U.S. The Dow shed 462 points after adding more than 500 points earlier in the day. Meanwhile, the S&P 500 closed 1.2% lower after rallying more than 1.9% in the morning. Everything was green and looking wonderful this morning, and then it just fell apart. The NASDAQ, well, it lost 1.8%, and the Russell 2000, boy, did it hurt. It lost 2.3%. Still, investors weighed upbeat data on U.S. private employment and factory activity against hawkish remarks by Federal Reserve Chairman. Powell said on Tuesday that he expected to discuss speeding up the tapering of its minimum $120 billion a month bond buying program at the central bank's meeting that's coming up in a few weeks. And of course, they indicated that they're no longer using the word transitory to describe inflation. Yes, thank you for retiring that dumb old phrase there, because it does not fit our market conditions. We all know there is inflation. It's all around us in everything that we do. Among single stocks, there was a big loser, Salesforce.com. It dropped at least 11% after forecasting current quarter profit below estimates as it faces stiff competition from rivals, including Microsoft. And I'm going to do a deep dive on Salesforce in just a moment as well. I've got that lined up. All 11 S&P 500 sectors were trading higher in the green earlier today, but only one escaped with a gain. The rest were in the red. The consumer discretionary and communication services, those sectors led the retreat with 2% declines, while the utilities sector managed to squeak out a gain of 0.2%. High beta growth stocks were among the weakest performers, receiving little support from a decline in long-term interest rates. The 10-year Treasury, it declined 1 basis point to 1.43% after hitting 1.5% overnight. Value stocks outperformed on a relative basis, but it probably wasn't because of the better than expected November ADP employment change report or the ISM manufacturing index, since cyclical stocks struggled. Instead, many of the defensive value stocks in the healthcare and consumer staples industry, they did okay. Okay, that was a quick overview of the entire market. Let's focus now on a few individual stocks. Before that, let's check on crypto. Boy, crypto, Bitcoin, Ethereum, they were running today before a complete reversal, just a complete reversal. Let's see what Bitcoin did today. I do believe it is still in its, there we go. Get the lines on here. It's still in its chart pattern. It did break out again today of this resistance line for a moment to tap that 21-day moving average like it did yesterday. It did the exact same move. Right now, Bitcoin is at 56,755 and moving around right there. It is holding pretty strong, though it is down from yesterday just so slightly. But when it ran up to that 21-day moving average today, that was a high of $59,118 dollars there for Bitcoin. So the candle itself is still in this falling wedge structure. I cannot wait for this thing to break out. And at some point, it will break out of this falling wedge. The question is when. All right, let's look at Ethereum, ETHUSD on TradingView. Get Ethereum up here. Ethereum made a reversal too. It was going much higher. Yesterday, it broke out of its technical structure here. Today, it's pulling back. It did get to a high today, higher than yesterday's high, which is a positive. And that high was 47.84. Right now, it's at 45.33. So it is pulling back. It's at, right now, it's at a support line, which is about 45.50 is about that support area. So it's kind of flirting around with that line right now. All right, so that's Bitcoin and Ethereum and their charts. Let's talk about Apple for a moment because it was going strong earlier today. Ticker symbol AAPL for Apple. Let that load there. Again, it was doing better this morning than it ended the day. It was down 0.3% on the day, so pretty flat. But it got to a high of $170 today, a new all-time high this morning. So that's how good things were this morning. Apple at a new all-time high, but it's at 64.75 right now. Now, Apple, there was a report that, and I don't know how to pronounce his last name, but the auto engineer that Apple had hired, Michael, I don't want to mess his last name up. I don't know how to pronounce it. It's a longer name, SCHWEKUTSCH. That's the best I can do. But anyways, he's leaving Apple to join electric aviation startup Archer, which I found to be interesting. And that was according to a CBS or a CNBC report for Apple there. So that's an interesting dynamic because there's been a lot of talk about Apple in an electric car. So now he's going over into, electric aviation. Is Apple coming out with an electric car, or is Apple coming out with an electric flying car? Good question, right? That would be interesting, wouldn't it? All this talk about Apple and an Apple car, and boy, oh boy, wouldn't that be neat? And all the speculation, who could Apple be partnering with? And then all of a sudden, out of right field, here comes Apple flying in with an electric flying car. That would be rad. That would be totally awesome and totally catch people off guard if that happened. Let's see. Just saw you think it is better to stay with lower valuation stocks like Facebook and Apple, given the things to come? Yeah. Okay. So with the way the market dynamics are right now, you would be better off taking a defensive stance in the market. And what does defensive stance mean? It means that you have a cash reserve, okay? You have prepared for this situation. So you've been taking profits on these all-time highs, saving up cash. That's one aspect of the defensive play. Another aspect of it is investing in companies that have a high margin and are profitable. That way there's a buffer built in. So if they have to get squeezed on price, whether it's inflationary pricing or pricing pressure that they have to lower their price for the consumer, they have a margin, a big enough margin spread that they can cover being hit on both sides, whether it's inflation or consumer side. That's what you want to see. And of course, in order to have those margins, the company has to be profitable. They have to be making money. Facebook makes a ton of money and they have a very high margin. Another type of company would be healthcare, right? Healthcare related, just because of the pandemic, the new variant, and whatever chaos that may bring. There's also companies in the consumer staples area like Costco. That's another company I was going to talk about here real quick. Their ticker symbol is COST, C-O-S-T, for Costco Wholesale, that are selling products to consumers that the consumer has to buy over and over and over again, right? It's your basic milk, eggs, water, whatever it may be, your basic staples. Walmart is another example. Those consumer staple companies would do better in this type of environment as well. And then you have Amazon, of course, who should continue to do really well also. This is taking a defensive stance. Now, the reason you build up that cash is for the companies that you have an investment thesis on, that you have conviction in, that you believe in, that when they go on sale, when the stock price has come down 10, 20, 30, 40%, that you can then go buying on those big discounts and dips in the stock, because the stock market won't stay red forever. Eventually, it will turn back and start moving in the upwards direction. So you just keep those little tips in mind. Maybe tomorrow I'll do a bigger segment on defensive stocks specifically that we can all look at. But the reason I brought Costco up, they were down 1.7% today. They're still very high right now. They're above that 50-day moving average, which is a very critical moving average. They came down. They didn't quite touch their 21-day moving average, but they reported their November adjusted comparable sales, and that grew 9.2% year over year. Their net sales were up 15.7% year over year. So that's why Costco makes a great defensive stock. They're growing in a time like this. And of course, they're not selling, anything fancy. Well, I guess they do occasionally, right? But their bread and butter is selling you bread and butter, the things that you need on a daily basis. Let's see. InMode is approaching a buy point at 67. I haven't looked at InMode in a couple of days. MD, INMD for them. Now, this is more of a cosmetic type company. They have skincare and many other things like that. That's not something, if we get back into this pandemic, maybe, I have no idea what to think about it. But yeah, it's approaching this support line right here at $68. However, this is one that could potentially fall a little bit further than that if the market stays where it is. Right now, price to earnings is 51.5. All right, just looking at some stats over there on the side. This is one, yeah, it's getting to a point at $68, but if this overall market continues, it could go below that. It very well could, because look at this. It had 3 symmetrical triangles here. 2 broke to the upside, and then 1, it fell through, and it's been falling ever since. Once it broke below that 50-day moving average, that's where this thing turned bearish, and it's been falling now for 2 days in this zone right here that looked pretty stable. But now that the overall market, and we have this whole new variant, that's going to change our equation on our investment thesis. Every single company that we've looked into, one part of the equation is the overall market. And right now, that has turned negative. It's turned bearish. I mean, this thing right now, it is oversold. It's at 25.83 on RSI. That is oversold for this thing. But look at the selling volume yesterday. And a lot of companies were green yesterday, while this one, it had 7.6 million on volume. So 7.6 million transactions. Of course, most of those being sell orders. The average was only 1.7. So nearly a 7x there in selling pressure for InMode yesterday. Today, not as bad. It was 3.5 million on a 1.8 million average. So still, volume was very high, especially yesterday. If we go back and look, we haven't had selling like that until we go back to September 28th, right before the dividend payout, or I guess that was a special dividend right there. Oh no, the stock split. Okay. Yeah, there was big selling right before the stock split there. All right, cursor. Yeah, right there on September 27th. That was the last time we had volume like this. And then to go find volume this high again, we've got to go all the way back here to November 2020 and October 2020 for big volume, big selling volume like that. So that's providing a lot of pressure bringing this down. Quite frankly, it wouldn't surprise me if the market dynamics stay the way they are. Quite frankly, this could fall to its 200-day moving average. Now that the whole psychology of the market has changed, it's gotten defensive, it's gotten worried, it's gotten fearful. Fear is just running things to the ground, but that provides buying opportunities. That's why, to me, it's not too scary. because we're ready to go buying on these big discounts. That's what that's what we're in the market to do. Buy low and sell high, so we get in as low as we can. Now, if you are in this and it's going down, you've got two options. You can either cut your losses, or you can dollar cost average down. If you believe in mode and you believe in your investment thesis on the company, your DD, your due diligence, you've done it and you feel good about it, then you can dollar cost average as it's falling down to lower your cost basis. Then again, your cost basis may already be low. So I'm not sure what your specific situation is in the company. But yeah, if the market dynamics continue to be fearful, I mean, President Biden talked about just today possibly implementing stricter COVID testing for people traveling within the United States. So if you go from Virginia, where I am, to say Texas, then you're going to have a COVID test before you leave Virginia, when you enter Texas, and then 2 more on your way back. That scares a lot of people when they hear talk like that. And they want to just take their profits and get out of the market. And that's what can cause all of this selling pressure that we've seen today. But again, that's what provides the discounts and the dips that we buy. So my thoughts on InMode. If you're not in it yet, I would wait. You can always set a stock alert. That's the best thing to do. A stock alert at a price point that you're interested in, maybe just a little bit higher than where you want to get in at. So when it's triggered, you can go pull the chart up and see what's happening. Is it just on a downtrend right now and it's better to wait? Or you can set a limit order with a stop loss. A stop loss is very important. The limit order is you set the specific price that you want. So when the stock then reaches that, maybe you set a price for the 200-day moving average, which is at $56.54 right now. Your order will not be executed until it reaches that point. And then once your order is executed, you have your stop loss. Your stop loss is there to prevent you from losing too much. The stop loss, it can be set for anything. It can be a dollar amount. It can be a percentage amount. When I'm doing quick trades, I'll use a percentage amount as small as 2%. If I'm doing a bigger swing trade or something, I might use a bigger percentage, like 5% or 8%, something like that. So make sure you set a stop loss if you're getting in right now on any type of growth stock. But I would, right now, because of the market dynamics, I know I sound like a broken record, keep on saying that, I would hold off on growth stocks right now, especially if you're not in them right now, because valuations on most of them are stretched pretty high. Just look at Matterport, MTTR for Matterport. Their valuation has gotten a bit stretched. They were up 10% this morning, and they have now fallen to close at down 3.7%. This is one that's just been running and running and running. Buying up here does not make sense. Not for a growth company like this. They need to come back down before you even start to open a position, or you're going to get left holding the bag up here at the top. So when we're trading, when we're investing, we always have to stay nimble, and we always have to update our investment thesis. When we initially do our due diligence, our DD, we do our technical analysis, our TA, and we form an opinion on a particular security. We have our investment thesis. That investment thesis is not etched in stone. It will change. Every time you get a new piece of data, that investment thesis should be updated, whether good or bad. If it is not updated, then you will fail at investing and you will fail at trading. It is very important that you are constantly educating yourself, getting as much knowledge as possible. I go with this, I don't know what to call it, a thought process, a motto, I don't know. But it is to learn something new every day. That's my goal. And I do. I learn something new every single day about the market. And if you have that mindset and you are nimble and you can change and update, evolve, you'll win. You will be a winner in the market. But you have to be able to do that. Okay, a couple more companies to run through and rapid fire. And then I want to do my deep dives. Square, I don't know what is going on with Mark Zuckerberg and Jack Dorsey, but I don't know what's up with them. Square, which is a Jack Dorsey company, he's in the news because he just stepped down as CEO of Twitter, but his other company, Square, well, it's getting a name change. And that name change is going to be, drum roll please, Block. Oh my goodness. Square is changing its name to Block. Yes, Block. BLOCK. The ticker symbol will remain the same for now, though. But the company said the change to Block acknowledges the company's growth. Reality is better than fiction, right? My goodness. Since the start of 2009, the company has added Cash App, it's added Title, and it's added, hold on, I've got to look at my notes for the name of this company, okay? It is TBD 545666975. Yeah, that's the name of a company that Square owns. Oh my gosh. Yeah, so those are the different companies that they have acquired over the years, right? So the name change creates room for further growth, as they say it. I guess Square is too primitive, and Block is more enlightened. I don't know. It's interesting. Fintech stocks are losing big. Don't see a bottom for PayPal. Yeah, but PayPal is one of those companies that has a big margin and it makes money. PayPal is one that I am definitely buying on the way down. Definitely. We've talked about this before. We've talked about this fall. We have this circle right here for this zone, and it is, where is it at for the zone? It's right at the bottom of that zone. It's at 179.58, down another 3% today. So it's been bouncing around here between this 180 and what is this? 185 for 3 or 4 days now. Yeah, but this is what PayPal is, one of those companies that has a big margin and it has cash flow, It's making money. It's profitable. So this isn't one that I would give up on. As this price is going down, I am buying it all the way down, wherever its bottom may be, for PayPal, because I believe in PayPal and where it's going. Its price to earnings ratio for the past trailing 12 months is 44.5. Let's see here. So, yeah, not sure where the bottom is, but just look at these financials. I know the stock has not been performing. If you look at this, it's, my gosh, it's got total assets of 70.3 billion. Its debt to assets is 71.4%. It is just, let me go to the quarter here, and we'll look at this past 4 quarters, this load here. It's got a profit margin of 17%. So PayPal has got better margins than Square does, or I mean Block, which would be an equal, you would think to be an equal competitor to PayPal is Square. So yeah, I think PayPal is one of those that's got good margins. It's in a good business, but yes, fintechs have been getting beat up lately. That is true, especially PayPal, but this puts it in such a fantastic discount to buy. If we look here for the year to date, this thing's down 23%. Sure, short term, this would probably look ugly for anybody who, bought this thing a year ago. They would be thinking, oh man, I'm down 23% and it's been a whole year. What's up with that? Man, that was a dumb investment. Well, I would dollar cost average down then, because me personally, I like PayPal. And the cheaper it gets right now means the more shares I can buy. That's my thought on PayPal, and I would pick PayPal over Square, definitely, any day. Your MasterCards, like your credit cards, like MasterCard, it's doing a share buyback right now worth billions of dollars. That's good, even though the stock hasn't maybe been as rewarding as some others. Let's see here. What did Cathie say? I've been looking for a theory that justifies my stubbornness with growth. Yeah. Clouds, I'm going to get to that, Devin, in just a second. Cloud security stocks like Zscaler should also do well in the coming weeks. Yeah. For me, a lot of these stocks that I talk about, I'm not looking at them in a short lens, short time frame. A couple weeks, a couple months. I'm more like 5 years for many of the stocks that I talk about. I'm investing for the long term. And that's why seeing PayPal drop like this, to me, isn't a bad thing. I know the company's strong. A company that's not doing so good today, however, Cathie Wood thinks it's doing very well. Robinhood, they dropped today. Now, I think they were down 7.75%, but they are up 1.25% in after hours. Who knows? Maybe Cathie Wood has been buying in after hours on Robinhood, and that's why it's up 1.2%. But anyways, they fell to their lowest level since their IPO, since they went public 4 months ago. And they fell on really, really big volume. We haven't seen this type of volume since IPO day and a couple of days following it. But this Robinhood, its IPO lockup fully expired. So their shares sank, I believe, mainly due to that. And of course, it's just been getting beat up over the past few days and few weeks, really. And maybe the whole month of November, it's been in a downtrend, actually, looking at it here. I think actually the beginning of November, it did pop. Yeah, so starting on November 8th, it's been in a downtrend since then. But this was the most significant lockup expiration, because this is it. This is the big one, right? And following the company's IPO, I believe there was around 570 or so million shares that were bought at IPO by insiders and key investors. Salesforce was one of those investors. And of course, I'm going to do a deep dive on those here in just a moment. But all of those shares, they became eligible to sell today. So that's why the volume was higher today. If we look at the volume here, it was 37.5 million shares traded hands today. And average volume is only 11.3 million. So that was a big one right there, 3x in volume or so, give or take. Okay, there are a couple earnings that we should talk about right quick. I'm just going to do these rapid fire. We're going to move through them quick. First up is CrowdStrike, CRWD. They had their earnings, Q3 EPS. They just fell off it today. This is one that I set this stock alert for the other day because it was in this trading channel. It had gotten a bit bearish right here when it was down on its 200-day moving average. We talked about it. It was bouncing around just under it, using that as resistance, but it fell 2.7% today, but it has bounced 2.7% in after hours. So people are buying the dip already on CrowdStrike. Now, their Q3 EPS of 17 cents beat by 7 cents. They had revenue of 370 million, which was a 63.5% year-over-year growth, and they beat by 15.8 million. A couple of the key highlights: the cash and cash equivalents grew to $1.9 billion as of the end of October. Ending ARR grows 76% year-over-year to surpass $1.5 billion. It added over 1,600 net new subscription customers for the second consecutive quarter. It delivered record operating and free cash flow. For Q4 2022, they're guiding towards 406.5 to 412.3 million on EPS of 19 to 21 cents. For 2022, the whole year, they're guiding for total revenue of 1.42 billion to 1.43 billion on EPS of 57 cents to 59 cents a share. Okay, Snowflake, ticker symbol is SNOW, SNOW. They reported their Q3 earnings. They were down 8.5% today, but they're up 12.8% in after hours. When I looked earlier, I said they were up 10%. So definitely buying the dip on this one here in after hours. But Snowflake reported a loss of 51 cents, but that beat by 10 cents on EPS. They had revenue of 334.4 million, which was a 109.5% year-over-year gain, and that beat by $20.2 million. They had product revenue of $312.5 million, representing 110% year-over-year growth. The remaining performance obligation of 1.8 billion, representing 94% year-over-year growth. And they had a total of 5,416 customers, and their net revenue retention rate was 173%. That means they're keeping more customers than they are losing. That sounds kind of weird to say, doesn't it? Q4 2022 guidance: product revenue of 340 to 350 million, which is a 94 to 96% year-over-year gain. For the full year, product revenue of 1.12 billion to 1.13 billion, which is a 103 to a 104% year-over-year gain. All right, next up real quick is Splunk, SPLK, for their ticker symbol. Splunk reported their Q3 EPS of a loss of 39 cents, which beat by 16 cents. They have just fallen off the past week or so here. Look at that. Wow. They were down 7.69% today, and they were up 1.6% in after hours right now. It just totally skipped through this range over what 1, 2, 3, 4, 5, 6, 7, about a week in this range, and then yesterday and today it just fell right through. Its RSI right now is a 16.7, so that's why some people are probably buying the dip on this one, because that is way oversold at 16.9. Anyways, okay, EPS beat by 16 cents on revenue of $665 million, which was a 19% year-over-year gain, and that beat by 18 cents. I'm sorry, $18 million. Now, their cloud ARR was $1.1 billion, up 75% year-over-year. Their total ARR was $2.83 billion, up 37% year-over-year. Their cloud revenue was $243 million, and that was up 68% year-over-year. They had 270 customers with cloud ARR greater than $1 million, and that was up a whopping 96% year-over-year. They had 635 customers with total ARR greater than $1 million, and that was up 43% year-over-year. For their fiscal year 2022 guidance, total revenue is expected to be between $2.51 billion and $2.56 billion. Now, consensus on that one was $2.58 billion, so they're coming in a bit on the lighter side of that. All right, two more companies, then we're going to get to what Cathie Wood had to say today. First up, ticker symbol AMBA. Ambarella. This is a company I'm looking at for the long term here. They were up 14% regular session, and they're flat, up 0.5% in after hours. Now, they beat by 8 cents on their revenue, on their earnings today. They beat by 8 cents on EPS. They beat on revenue, and they guided their next quarter revenue above consensus. I'm looking at this one. I'm doing my research on this one. I haven't come to an opinion yet on this one, but it is one, Ambarella, that I'm looking a little closer at. It's one that just kind of came across the wire. It caught my eye, and I am definitely looking into it. To give a quick synopsis here, they develop and sell video compression, image processing, and computer vision solutions. It's got processors and software that cater to end markets, including security cameras, automotive cameras, EVs. That's one of the reasons why those EVs need cameras. They offer the cameras. Let's see here. What else? Industrial and robotic applications. So they've got the cameras for the EVs, and they got the cameras for the robots that we're going to have around the world, right? Like the Tesla bot, it needs cameras to see, and this is one of those camera makers. So that's why I'm looking into this a little deeper. It's up 123% year to date. But yeah, it was flat over the summer. It had a nice run in September and October. It is sold off, but it's now popped up with its earnings being way up here, way up here. But it's what I'm looking at. Ticker symbol AMBA. Okay, real quick. The Chinese EV companies, Li Auto, NIO, Xpeng, they reported their November deliveries today. So Li Auto came in with November deliveries increasing by 190% year over year. NIO's sales increased 105% year over year, and Xpeng increased 270% year over year. So they're doing really good with their deliveries and their sales for November, and that should continue into the future. Okay, Cathie Wood. Cathie Wood. She had some very interesting things to say about some of the moves that she's made recently. So first off, if I go back to the SPX here, which is looking at the S&P 500, right? Cathie Wood says we're not in a bubble. We are not in a bubble, is what Cathie Wood said. She explained her reason for being bullish on companies like Twitter, Robinhood, and of course her favorite, Tesla, and also Teladoc Health, which is an interesting company, but it's not profitable. And remember, we want to have companies that are profitable to be on the defensive side, and we want companies that can fluctuate with their price on either end, whether it's with the manufacturer, where they're buying from, right, buying raw materials, or whether it's pricing for consumers. Teladoc isn't one of those. Robinhood isn't one of those. Tesla, maybe, but I wouldn't quite put it in that type of a category, even though that is a company I'm definitely buying almost no matter what the price is, because I know Tesla is going up and they are just, oh man, I could go on for an hour talking about Tesla. Okay, so some of the other things that Cathie Wood said. And this was in an interview earlier today. She bought 1.1 million shares of Twitter yesterday. Of Twitter. She gave her stamp of approval on the CEO switch at Twitter. And in her view, Twitter has a good chance or the right view for monetization, monetizable active users, right? She thinks there's a good case to be made for Twitter making money. I'm not so sure about that, but that's Cathie Wood. She's smarter than I am. I will say that for sure. She also thinks, and this is one of the whole reasons why she believes that Twitter has monetization or monetizable users, is Twitter is set up to be an active NFT marketplace. That's what Cathie Wood, and that's why Cathie Wood and ARK Invest are putting their money behind Twitter and buying Twitter because of the NFT potential. That is very interesting to me. I know a while back, Jack Dorsey was talking about offering, like tips for creators, like not to plug myself here, but just like how during this live stream, you can purchase one of those stickers, right, for like $1.99 or $4.99 or something like that, right, for the live stream that you could do right now. You can also do super chats in the live stream right now. And that's a way to help the creator, help to support the creator and the work that they do. Well, a while ago, Jack Dorsey was talking about having a tip function within Twitter that people could tip creators on Twitter using cryptocurrency. I thought that was an interesting idea. There's a social platform called Locals that does something similar to that. They're like a Patreon, but more like a Twitter. Really, it's just a mesh up of Facebook, Twitter, and Patreon kind of all together as a platform. It was recently just sold to another company. I can't remember the company that was sold to. But that was an interesting feature that could be added to Twitter to help creators. So yeah, that's one of their reasons behind investing in Twitter. Now, Robinhood, Cathie Wood on Robinhood thinks that Robinhood has the best user interface out there for retail investors. And I would have to agree with that. When you open the Robinhood app, it is really easy to buy a stock. It is really easy to buy a fractional share of Bitcoin or Tesla, right? It's really easy to do that. When you go to another app like Webull, not as easy. Still relatively easy, but Robinhood is just super simple. And that's why she thinks Robinhood will win on the brokerage apps, and especially for retail investors, because it's just so easy. She also pointed out that Robinhood has an advantage with retail crypto investors, with Robinhood developing new strategies around crypto, like the crypto wallet that they are slowly rolling out. And Cathie Wood thinks that Robinhood is best suited to capture the retail investor, both on the stock equity side and the cryptocurrency side. I thought was interesting. Robinhood also announced, I believe it was today, that they are going to enable a feature for people to transfer. Maybe they have a brokerage account with Webull and they want to transfer it to Robinhood. They're making some sort of functionality that will make it a lot easier to do so. So that's something else. ARK also believes in the back to the retail crypto investor, that Robinhood is in the best situation to grow that over time. And they believe that, again, I'm just kind of repeating myself here, but it's just so simple. And that's why she believes that Robinhood will flat out win. Now, on Tesla, again, we could go for an hour talking about Tesla, but she says that Tesla has the future of EVs locked up, and Tesla also is the king of autonomous driving and has that locked up. So those are a couple points on Tesla. On Teladoc Health, this one was interesting. Now, it doesn't make money yet, but she says that Teladoc Health is much more than a stay-at-home telemedicine platform. She thinks that it's more than that, right? For Teladoc Health, she thinks it's one of the most underappreciated stocks out there, and that's TDOC, TDOC on the chart here. But she thinks it's one of the most underappreciated stocks. And we've looked at this thing before, and we've talking about how it has just fallen from highs up here over $300 a share. Now it's at $93. And it was up over $300. So this thing has fallen hard. And it's really fallen the past couple weeks. Look at that. A lot of volume today, yesterday, last Friday, all last week. A lot of volume selling, averaging about between 6 to 8 million on volume, with an average of around 4.1, 4.3. So yeah, I mean, volume's just been upselling this thing. The RSI is at 21.7, so it's oversold right now. But yeah, she thinks it's the most underappreciated stock out there. And it has pulled so far away from the competition that Cathie Wood thinks it will be very difficult for other companies to catch up with Teladoc Health. She puts Teladoc Health in a very similar category to Tesla being the king of EVs and autonomous vehicles. She puts Teladoc Health in a very similar category, being at the top, the leader that nobody can catch in its field. I thought that was interesting too. Now, of course, her stocks or her funds, like ARK, for example, they have not been performing all that well this year. Look at this slide today in her main one, ARK. It was down 6.7%. It is under $100 now. Full transparency, I do own ARK. I own a couple of the other ones. I own ARKX, her space exploration. But look at this. This price that it's at right now, you have to go all the way back here to May 13th, 2021. And then before that, you have to go back to November 16th, 2020 for this pricing, where it's at right now. So a lot of people are totally going in the opposite direction of what Cathie Wood thinks with this outflow of money here. So yeah, there's a couple of things on what Cathie Wood said in her interview today. I find it interesting. She has definitely got a different thought process than many others. That's for sure. Okay, enough on that. I've got a couple of deep dives that I want to do. First is Zscaler. Man, did they have good earnings. Give me just a quick second here. Sorry about that. I've just been talking a lot here. Okay, here we go. Zscaler. Let me open this chart up just a little bit more here. I want to get the 2021 on the screen. Okay. Let's talk about Zscaler. Ticker symbol is ZS. Zscaler is keeping the scales tipped in its favor today after the company easily outpaced its prior revenue growth forecast and issued bullish guidance in Q1. With the cloud-based cybersecurity company trading at a relatively rich valuation at about 49 times fiscal year 2022 sales, and the stock already having appreciated up over 30% since the beginning of October, the bar was set quite high for Zscaler heading into Q1 earnings. Nevertheless, after posting growth of over 60% year over year, guiding Q2 revenue well above consensus, and raising its fiscal year 2022 revenue guidance, Zscaler is receiving due praise from investors. Although that praise fizzled out today. It fizzled out with this stock dropping today. So, in addition to that robust sales growth and its bullish outlook, other highlights in the quarter speak to Zscaler's technological, I get that word right, technological advantage as businesses continue to bolster their cyber security systems. One standout feature in Q1 was that Zscaler's astounding revenue growth of 61.7% year over year to $230.5 million, not only crushed the company's prior forecast of $210 to $212 million, but was also up against strong 52.4% growth in the year ago period. This growth was led by each of Zscaler's products as demand to protect against cyber attacks only grew. For example, Zscaler saw a more than 4 times uptick in threats hidden in its SSL encrypted traffic from last year. The company also noted it is the only cloud provider with specific architecture designed to inspect SSL encrypted traffic at scale. This technological advantage helped drive an 87% jump year over year in customers who pay over $1 million annually after more than doubling in the year ago period, along with tremendous growth in large customers. Zscaler still has plenty of upside potential, given that only about 35% of Fortune 500 companies and 25% of Global 2000 companies are using its service. Looking ahead, Zscaler expects Q2 adjusted EPS to slightly increase year over year to 11 cents, but expects revenue of $240 to $242 million, which is well above estimates and represents over 50% year over year growth at the midpoint. Zscaler also raised its fiscal year 2022 revenue guidance to $1 to $1.01 billion, and that's up from $940 to $950 million. Quick question up here, new here, any penny stocks you look at? Not really. We really don't look at penny stocks. If you have a suggestion for a penny stock, I would be happy to look at that. But we typically don't really talk about penny stocks much. Thank you, Devin, for catching that comment too. Not many penny stocks, good short-term setup though. And he'll talk about any stock you'll ask. Absolutely, that's right, Devin. Any stock you want to look at, just put the ticker symbol and the question or ticker symbol in the comments, and we will go over it live during the show. Absolutely will. All right, back to Zscaler, and it just blew my mind with the growth that they had. So with this signals this jump in their expectation. It signals expected further performance. Overall, Zscaler got out to a rapid start in fiscal year 22. Also, even though the market did not love Zscaler's Q4 results, I think the prior quarter had numerous highlights, and Q1 only built upon those solid numbers. Lastly, given that the pace of going digital is only accelerating, the need to protect against cyber attacks is growing as well. Zscaler's zero trust architecture is already being used at 8 of the top 10 banks outside of China. It is clear that the company's technology is a favorite among businesses to stop hackers. This technological advantage, who also makes Zscaler well positioned to keep its momentum going through fiscal 2022, especially given the potential to expand among Fortune 500 and Global 2000 companies. So that's my quick thoughts there on Zscaler. I do want to dive into Salesforce for just a moment. Of course, if you have the question, just leave the ticker symbol in the question and we'll go over it. Now, Salesforce is not selling investors on last night's Q3 earnings results. I know we looked at this yesterday. We talked about it yesterday, and I said I didn't think we got a question on it, but there actually was one question about Salesforce. So I looked into it a little bit further last night, And here's what I came up with. And of course, I think investors agree with me. The stock was down 11.7% today. But even though the quarter did yield Salesforce's sixth largest EPS beat in a row, Salesforce saw strong demand across all products, region, and customer sizes. The pandemic has spurred companies to rethink their digital capabilities in terms of Salesforce automation, customer service, marketing automation, and analytics. And Q3's results reflect that trend. Customers want to know what their customers are looking at, doing on their websites, right? And they want to keep track of all the phone calls, all the emails, and that's what Salesforce does. What makes this quarter notable is that it marked the first full quarter with the Slack acquisition in the fold after the deal closed on July 21st, bringing one more piece of news into play. Salesforce also last night announced that it had promoted their Chief Operating Officer, COO, Brett Taylor, to the position of co-CEO, joining Mark Benioff. EPS was again well ahead of analyst expectations. Revenue rose 26.6% year over year to $6.86 billion. The company's flagship Sales Cloud saw a third consecutive quarter of acceleration. Salesforce now has two $6 billion units, sales and service. While total revenue was above analyst expectations, the upside was much more modest than that of recent quarters, which is a bit worrisome that they're slowing down. Also, billings were a bit weak. Non-GAAP operating margin was flat year over year at 19.8%, which was a bit disappointing given the larger revenue base Salesforce had this quarter. Because remember, they now have the revenue from Slack being reported in their earnings. So that should have given them a boost, theoretically, right? But it didn't. The main problem was the guidance. Of course, I say that with earnings all the time. It's not just about whether a company beats on the top or bottom line. It's what the company is guiding ahead, because the stock market is nothing but bets on the future performance of a company. And if a company is giving guidance, which is what they're going to do in the future, and that guidance doesn't look good, then the stock will go down. Salesforce dropped 11.7% because of it. Now, Salesforce guided Q4 EPS well below estimates while calling for revenue to be in line. Also, its revenue guidance for Q1 and for fiscal year 2023 were both below expectations. It's important to understand that Salesforce tends to be conservative with its guidance, though. On the flip side, Salesforce did guide higher last quarter, but perhaps analysts had not updated their models yet to include Slack. There are a lot of cross currents in play here, but the guidance was a letdown overall. Speaking of Slack, it posted $280 million of revenue, which was $30 million ahead of guidance. Also, its other performance metrics were good, with $100,000 customers up 44% year over year. That being customers who pay $100,000 a year, they were up 44% year over year. And the adoption of Slack Connect, that popped 176% year over year with their customer base. On the call, management did acknowledge that it saw some headwinds in its MuleSoft business. it faced issues in terms of not being able to scale quickly enough to keep up with demand. Of note, a large portion of MuleSoft revenue is recognized in this period. So if it stumbles, it has an immediate, oversized impact on overall results. This helps explain the inline revenues in Q3 and Q4's lackluster guidance. Finally, turning to the co-CEO news, Brett Taylor has a great track record. His productivity software startup, Quib, I think is how it was acquired for $412 million in 2016 by Salesforce. However, I am not a big fan of the co-CEO model. They usually don't last long, and it makes it more difficult for investors to understand a company's strategic vision when you've got two visionaries potentially looking in two different directions. Bottom line, demand remains robust as the acceleration of business to business and business to consumer digital relationships continue to drive demand. I was a little skeptical about how a communications platform, Slack, might fit with Salesforce's other offerings, but it seems to make more sense right now. While I like what Mr. Taylor brings to the table, like I already said, I'm not a fan of that whole co-CEO model. The stock is taking a hit mostly on lackluster guidance. The move in the stock strikes me as perhaps a bit overdone given Salesforce's history of conservative guidance. However, the stock has been making a strong move in recent months, so it looks like a good reason for some to book profits. All right, that's Salesforce. Last deep dive that I wanted to do today is Box. This one really came out of nowhere. Excuse me for a quick second. All right. Sorry about that. Okay. Remember when we looked at this yesterday when their earnings came out and we were talking about that support line, right? And then that support line, well, it really doesn't mean anything because the stock was up here in this circle. Well, of course, that's where it opened today, where the circle was. I'm just going to get rid of that. Here's the candle for today. It was up 10.25%. Of course, the majority of that was last night's after hours move. But it did run up and it did touch this resistance line at the top. That is significant that it ran up and touched it and did not break through. That gives us our 3 points of contact on this top resistance line, and that confirms that this line is solid. Now, when it fell today, it fell almost to its 50-day moving average, but not quite. And then, of course, it bounced from there. Right now, it's sitting at the bottom of this candle. And that's typically, for anybody new on charting, when you have a red candle, the price is usually at the bottom of that red candle. If you have a green candle, then the current price is at the top of that candle. Just to make sure everyone knows that. Excuse me there. Okay, with Box, shares cannot be kept boxed up today after the cloud-based content management company reported its 4th straight quarter of expanding revenues in Q3. Perhaps a lesser-known cloud storage and electric signature company, Box, has performed well year to date. Shares have expanded over 40%, crushing 2 of the company's main competitors. Dropbox, and their ticker symbol is DBX, and DocuSign is another competitor. I'm sure you know their ticker symbol, DOCU. which have seen their stocks grow only 12% and 9% year to date. So Box has outdone both of them. Although Box does trade at a premium at 31 times fiscal year 2022 earnings compared to Dropbox at 15 times forward PE ratio. The company trades at a massive discount, though, relative to DocuSign, which, my gosh, when I looked this up, it had been a while. DocuSign, it trades at a frothy 138 times fiscal year 2022 earnings. That's incredible. Furthermore, given that Box only recently launched its e-signature feature, which integrates with Mammoth enterprise software, providers like Salesforce, CRM, we just looked at them, and Microsoft, I think Box is a company worthy of keeping on the radar. Now, this is a growth company. This is not a defense company for where we are right now in the market. So also keep that in the back of your mind. In Q3, Box's adjusted EPS upside was rather light at just 1 penny. We talked about it yesterday. They beat by 1 cent. But that result was somewhat typical of the company over the past few quarters. Revenue growth was a slightly different story, appreciating nicely at 14.3% year over year to $224.04 million, which topped estimates. Given the fairly high valuation, the revenue growth may seem somewhat disappointing. However, the remaining performance obligations, the RPOs, paint a clearer picture. RPO in the quarter grew much more robustly than it did revenues. It was up 25% year over year to $948.1 million. This is a forward-looking metric and partly shows customers agreeing to long-term contracts, a testament to Box's technology and accelerating digitalization trends. Another metric that furthers this point is Box's customer growth. In Q3, contracts over $100,000 grew 56% year over year. In addition, more customers are purchasing a suite of Box's products. $100,000 plus suite deals jumped 177%, now making up slightly under a third of total revenue, a leap from just the high teens a year ago. Lastly, the company has already sold or has already seen solid adoption for Box Sign, Box's e-signature offering, even though it was only launched in October. For example, a commercial real estate company purchased Box Sign to centralize its content given Box's integration with Salesforce, ticker symbol CRM. We talked about that, right? I think Box Sign will quickly become a key growth factor going forward, as the e-signature industry has been rapidly expanding, bolstered by the pandemic. DocuSign went from recording around 35% quarterly growth pre-pandemic to posting multiple quarters of growth over 50%. Bottom line, amid the rise in remote and flexible work and an acceleration on digital platforms, Box is benefiting from strong tailwinds, especially given its recent launched e-signature offering, making it a solid company to keep on your radar heading into 2022. All right, HPE, yeah. I started to dig into HP. I'll put them up here on the chart. Tomorrow's live stream, or maybe I'll put a video out tonight on HP. I was looking through their earnings. I picked Zscaler, Salesforce, and Box to go through today in more depth. I will go through HP. I'll put a video out tonight on HP, so that way you've got my full thoughts, and I have a little more time to look through their earnings report. But they were flat today, which is pretty impressive. Which is how the market operated today. They were up 7.3% on their EPS, and they beat not too much on revenue, kind of like 1.8%. So it was pretty much in line. And if you look at the stock, they have been bouncing around in flat. All three of their main trend lines, look at how spread out they were back here just above my head. Now their 200-day moving average, 21-day moving average, and that 50-day moving average are all right in there together. So this thing has definitely been pinballing around right there. So let me hop over here right quick and just pull this up for HP. So after I wrap up the live stream, I'll finish reading through the transcript from their earnings call, and then I'll put out a video this evening on HP. So just a quick scan over here. It looks like weak guidance. It looks like right now HP's got good demand for the business, but they are facing some supply constraints right now. That's going to be a problem for them for the next couple of quarters. It looks like they've said here on the earnings call. But yeah, I'll finish reading the transcript, and then I'll make a video this evening on HP. I'll put it out there for you to watch. But yeah, the company, it's just not right now. It's just not the right time for HP with inflation going up. They just don't have the margin protection that they need, and with the trying to do a couple things here at once. And with the supply problems that they're facing, right now is just not their time. So technically on the chart here, it looks like we've got this gap right here from about $13.50 up to $14.50. It looks like there's a zone right there that HP has been bouncing out of. If we go back to March of this year, when it broke above that line, there you go. So March of this year, 21, February of this year, it broke above this 1350 line right here, and it came back down in March. It ran up, it rallied, then it came back down, and it hit this point. But it was also its 200-day moving average right here. Let me circle that on the chart so you can see that a little more clear. But right here, when it bounced off this 1350, there was also the 200-day moving average, and then and that was July. And then back here in September, it fell below it at one point. Let's see here. It looks like it got down into maybe $13 even, which there's really no historical support right there that I see yet. Yeah, I mean, look at that. This zone has been a really good zone for HP historically. Because look at this area way back here. Here, it's right above my head. I'm gonna put a circle around it. There, that zone right there is what it's falling into right now, which that's a low of 1350. But there's no guarantee that it can't break above it. Remember, there's a saying in technical analysis that old resistance can become new support. Old support can become new resistance. So they can switch places, right? There's no guarantee that it can hold. Although when people are investing and they're trading and they're using technical analysis, everyone is looking at the exact same places on the stock chart. Everyone. And that's why you can have such symmetry on the stock chart because every other trader and investor are using those exact same things. Let's see. Howdy, hope everyone is doing good today. Red day. Yes, it was a red day. But that's okay because that's the day to buy and dollar cost average down. All right, so HP, I'll have a video out this evening on them. I need to finish reading the transcript of the earnings call, but technically speaking, they are in a zone right now. But of course, look here, April, May, June, August, September, October, November of 2020, and it was down in a much different zone. Not saying that that's where HP is headed, but it is in a zone right here. 1350 is the support area. You could have a secondary support area. Maybe, let's see here. Probably at $13, right around there, even. That's that next line. That looks like an area of pretty good support. Maybe down to 1275. Maybe. Yeah, let me put a lighter. I'm gonna put a different color line here because this is like a. I'm gonna make it red because historically speaking, that has been like the bottom on these different peaks. All right, so there you go. There's where the support resistance is for HP. Historically speaking, with it, of course, it can fall below that, and I'll have a video out later this evening about it. I just need to finish reading that transcript. Okay, any other questions on any other companies? I'll give you guys a few minutes there to type your questions in if you want. Until then, I'm going to hop over here. I'm going to look at some of the winners today. Of course, Box. We know that. We talked about Box in great detail. They were a winner today. Let's see. We talked about DWAC popping today. And of course, because DWAC popped today, and again, that's the Donald Trump related media thing. Fun, PHUN, of course, that one popped as well. They seem to be move in unison. Let's see, what would be a good entry point for Salesforce after meeting? Okay, after earnings, excuse me. All right, let's go pull that back up. CRM. Let's look here. All right, so that 200-day moving average is probably going to be a pretty critical area. And that 200-day moving average right now is at 249. And that's because most other investors, they're going to be using that 200-day moving average, and they're going to think that, okay, this could be an area of resistance for it, support for it. I mean, not resistance. But like we've seen with a few other stocks here recently, they may use that 200-day moving average to slow the stock down some, but then they fall below it. Here's an example. Facebook is an example of that, I believe. Yeah. So when we were looking at Facebook, it was hugging that 200-day moving average, right? It bounced around there for a day, but then it fell through. So it's not a guarantee, but it is an area of interest because a lot of people are going to be looking at that. If this thing continues to fall, that next area of support, it's probably going to be right. Let's see, let's line this up. Maybe around the 240. It looks like there's a little bit of support there. Let's change this color back. All right, 240. And then there's one just below that. That's about 235. That looks like a zone there. And then if it breaks that zone, then we're going to have to go down here to $200. I say 210 to 200 would be a zone. All right, so those are your two zones right there. I would set a stock alert for $240, and then once it breaks and you get that stock alert that it has broken the $240 mark, then open up the chart and see if are we having a red day? Is it continuing to go down? And if it continues to go down, then watch it, right? And you can set multiple stock alerts. I mean, you can set another one for the 235. You can set the next one for 210, and then the last one for $200 even. And if you use TradingView, now there's a link in the description for TradingView, and it's a free account. In TradingView, when you're over here on the right-hand side where you see this black dial with the numbers going up and down here, there's a plus sign. All you do is click that plus sign when you're on whatever price, and then the first thing, add alert for CRM, and then it's got $220.70. You click that, and then there, your stock alert is set. Of course, you can go into it and add different things if you want. You can put notes in there if you want. But that's what I would do. And then once it puts this orange dotted line on there, if you hover over it, you can double click and bring up your options here. So I'm going to delete that because I don't need that stock alert. So that's what I would watch for CRM. First, that 200-day moving average, because other investors are going to watch it. It could slow down right there. But if it falls below that, then it is 240 to 235. That's your next area. And then if it continues to fall, your next area is 210 to 200. That would be your next zone, right? Set a stock alert. Set a stock alert. The 200-day moving average is at 249. Put a stock alert right there. And then open up the chart when you get the alert and look at it. If you want to look at a more daily view of it, because every time you guys see a chart, 99% of the time it's on a daily view, so each candle is one day. If you want to go a little deeper, up here is where you can select your different time frames. The 5-minute chart is what I use when I am looking at a specific day's action. So if I want to see how it acted today, and only today, then this is what I would have pulled up. This gives me the end of the day. Here, let me get that out of the way. This gives me the end of the day yesterday, the gap down right here after hours, and then today's decline and its slow fall and its slow bleed out today. That's what I would use. If you got the stock alert for 249 for the 200-day moving average, then I would come in here, I would go to the 5-minute chart, and I would look and see what is it doing today. Is it in an uptrend? Did it tap that and bounce off? Is it continuing to break through, moving sideways? What is the stock doing? So I hope that helps for CRM, Salesforce. All right, any other questions, ladies and gentlemen? Let me put Bitcoin in before we say goodnight and see what's going on there. All right. It's at 57,163. Oh, did I click the wrong chart again? And I have not forgot. I wrote it down. The HP video will be out this evening after I finish reading through the transcript. Did I do it again? Bitcoin. There we go. Coinbase. All right. So we've got a new candle now. A new daily candle. It's hard to see. It's right here at the tip of the trend line, the downwards trend line here. I'm going to adjust this. I'm going to pull it out a little further. All right. So we got a new candle now, and you see it's right there on the trend line. Now, remember yesterday's candle for Bitcoin, it ran up, it touched the 21-day moving average. The day before, it did the same thing, but came back down. What's it going to do today? Is it going to break above this resistance? Or is right now, Bitcoin is falling. It's going down. It was at 57,200 when we first got on the chart just a few seconds ago. And now it's coming on down. So it's coming off of that line right there. And see, this is the cool thing about technical analysis. Because every other trader, investor, they use the exact same trend lines, the exact same chart setups, the exact same patterns. And they trade off of the exact same thing that we look at, that you look at, that we all look at. And that's what makes technical analysis work. And it's why you can do good in the market. Okay. Well, if that is it and there's no more questions, then I'll wrap this live stream up. HP video coming out later this evening. And I guess then I'll see you tomorrow for another live stream after the market's closed. And let's plug in an Ethereum, and then that'll be the last one here. Oh, and then I'll pop back over and look at winners. I just want to see where the candle is. Okay, so Ethereum's candle is still above this support line here at 45.40. So remember that 45.40 is where support is for Ethereum right now. But remember, it broke out of its resistance line here. So if it were to come back down to this line and fall below it, that would be an interesting move. But its 21-day moving average and 50-day moving average are just below that top trend line there. So I think it will hold above it unless there's some crazy action that we can't foresee right now. All right, so Ethereum's looking good. Ethereum looks stronger than Bitcoin right now. Okay, this is funny. I gotta say this right here. There is this company. It's called Heartburn. The ticker symbol is Burn, BEAT. Sorry, Beat. Heart Beat. Sorry, Heart Beam is the company. I think of Heartburn for a day like today in the market, right? It was up 30% today. I don't know how that came out of nowhere doing that. And then, of course, Fun, we said was up. Box, we talked about. DWAC, DWAC, we talked about that being up today and why, because of the pipe offering. Of course, the VIX was up again today, another 7%. AMAT, oh yeah, AMAT was up. This was crazy. Let me go. Should I look at AMAT, Devin, or should I leave that alone? And Devin, you know what I'm talking about when I talk about AMAT. Yep, let me get back out of here. Sorry, that's for Patreon members. Sorry about that. I guess I should have left that alone. So that does remind me, if you like my perspective, if you like my ideas on these different companies, then first off, click the like button. Second, take the link for this video and share it on your social media channels. Sharing this video helps a lot. It shows YouTube that other people find what's in this video interesting. And then the third thing to do is click the first link in the description, and that'll take you to my Patreon page, where you can become a member. And there's a lot of benefits that you would probably like. I don't know how you are, your setup is with investing and trading and so forth, but you might find it valuable. At the very least, it does help support my research, my analysis, and technical breakdowns. At the very least, that's what it does. Okay, now that I plugged that, I guess that's it, right? We've looked at everything here. I don't see any other questions, so I'll wrap the stream up for today. Wow, that was a nice 2-hour long live stream. Good job, everyone. A lot of information in there. All right, I promise the HP video will come out this evening. I'll finish reading the transcript of the earnings call and give my thoughts on that. So that's coming this evening. And yeah, everyone, thank you so very much for being here. I greatly appreciate it. I will see you tomorrow around 5 p.m. For the next After Hours show, where we'll have a bunch to talk about, I am sure. Yeah, that's it. All right. Thank you, ladies and gentlemen, so very much for being here. I greatly appreciate it. And I will see you in the next video.